Hello, welcome to the weekly review for NASDAQ delivery, 4th week of February 2026. Without any wait, let's get into it. Okay. Before going into the hourlies and the minute and 5-minute charts, we will look at the daily chart and see what happened. Now, in the past 3 weeks, we discussed that in this first week, we were anticipating lower prices, which happened over here, and on Friday we went back up into the range, in this big range, 50% of the range. We were expecting the next week to open high, low, close, which happened Monday, Tuesday, Wednesday, Thursday, Friday. Now, the other week, the previous week, we were expecting the price to open high into this Frivilly gap and go down because we were expecting lower prices, but that did not happen. The whole week consolidated. It's this Friday, Thursday, Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday, Tuesday, and Monday. See, they all consolidated within the range of this candle over here. You see none of the body closed below this one. So this is very important to note because this will tell you that if the week is consolidating, expanding or not. Now, all of these candles are within this candle. On this week, we actually expand higher above this candle closure, and then we go down, and this new candle that has opened for Monday tomorrow is lower than this candle. So we can expect lower prices now because we have relative equal lows on the daily as well. So understanding that, we can see that we opened low and then we made a high in this Frivilly gap, and then we consolidated. And on the next week, this week, which we are talking about, this is Friday. So on Monday, we open low, taking out this previous low. And then on Tuesday, we open. Wednesday, we make a high into this important volume imbalance. And then on Thursday, we again dump down. And Friday, we consolidate. Now let's go back into the hourly chart. Let's look at the Monday hourly chart. Monday was a bearish day, and we opened high, low, and we closed inside of the range. Now, notice these hourly fairly gaps, we have been bringing them forward. When we are in a range, we can use the same point of interest again and again and again. And you have seen in the past 4 weeks that we have been using these two fairly gaps throughout the whole month, and we can find trades in all of those. So let's get down to a 5-minute chart. We open high, we make an Asia low, then we make relative equal lows with London low, relative equal highs with London high. Now it's a matter of time which one is taken first, so we can target the opposite liquidity. Here, take out the London high and we tap into that important favorable gap that I was talking about. We have a change in state of delivery, taking out London low, but I am bearish because we tapped into that important favorable gap. But overall, we understood that this is a daily favorable gap as well, so I expect lower prices. And we go down, taking out Asia low and previous day low. Let's go down to a 1-minute chart. Monday, just to be honest, I did not trade, and this is just from hindsight. So what I see here is we make a big first presented favorable gap. We have an order block. We have a central price over here, which almost aligns with the order block. So what I would do is that I would try to get an entry on the 50% of this favorable gap, putting my stop above the high because I expect the prices to not go there. I added a keynote here, no body closure above CE showing bearish order flow for key PD array. First presented favorable gap is a key PD array. We made an equal low with there was another low over here. We made an equal low and then went up. In macro, we tap into first presented favorable gap with order block while creating relative equal lows, and I could target these lows. All right, this would be the first trade. Let's suppose you missed that trade. The second trade would be easy. In our macro time over here, in the next macro, this was the first macro, I would see that there was an engineered low right before Asia low, and I would see that, okay, there's a favorable gap next to it. I can enter on that favorable gap. I can enter on that favorable gap and take the trade But if you want to optimize the entry, you can take the range from the previous high to the recent low and get an entry on the 0.5 or the optimal trade entry, whichever you like. You can miss entries over this. I would expect it to go back to 0.5, which is 50% retracement. And that can be a good entry towards the previous day low since we are expecting lower prices. So that will be Monday. I did not trade on Monday. Tuesday. So Tuesday opens low. Then we take out that low into our important fairly gap. We make a daily SMT with ES while we keep intact the previous day low and go towards the previous day high. Now, key important thing to notice is that why did we take previous day low here and why did not we take it here? Probably because on this day, we did not make an SMT with ES. But on this day, ES took the previous day low first, and that set up the prices towards the high side because this is an important SMT. Okay, let's get down to 5 minute. Now, we have to talk about SMT. It's an important topic, and we need a whole extra lecture for that. All right, Tuesday open lows. We made Asia London high as relative equal highs over here. We take that out. NQ does not take previous day low. Make an important low, suspect low for the next coming days inside an important fair value gap. NQ opens, takes London low while tapping into important fair value gap. Now this would be my entry if I was not looking for a macro. We come back here, stop just before this Monday open range gap and go down into 50% of the range, going back towards the previous day high. Now, I took this first trade. I saw this rejection. I saw these two candles rejecting it, so I entered and I targeted the 0.5 of the range, the fair value gap that was in that range. Now, it's really important that you always utilize the ranges. This is the premium discount range. And if the price is bullish, it would try to come back to the discount range to give smart money more opportunities to long. And inversely, if we are bearish, the price will try to come into a premium PD array, any of them, to give smart money an opportunity to short. So this is really important. NQ opens, takes LL, reverses with IFGG. This should have been the actual entry over here. Enter over here and then targeting these highs. But I take this one because I was late on the chart. Now, actual proper entry should have been this one from this fair value gap towards the previous day high because I was bullish. But that's fine. This was a valid trade as well, and this was a valid trade as well. But these are totally different in terms of how you look at it. This would have been an optimal trade because it's with the order flow. Okay, let's go to Wednesday. Wednesday was a pretty tricky day. I did not trade on that day. We open, make a small low, consolidate, I think, and then take out the previous day high, previous week high. If I was here on Wednesday, I would have taken a short. Sorry, I would have look at it and I might not have traded it because I was bearish. If we take this out and if I see the price keep going higher and higher and closing above this red area, I would not trade. But let's look at the potential entries, the longs that we could have taken. So on a 5-minute chart, Wednesday open low, make low in a daily fair value gap, making it a suspect low, of course. We take out previous week high, previous day high. At this point, I would be bearish, hence I did not trade on this day as I mentioned. Now, NQ opens, rips higher into the daily volume imbalance over here. Let's look at the 1-minute chart. I put a FEB there and see which thing aligns with the 0.5 of the range. Nothing. Only this order block was touching the 0.5, so I was expecting if the price comes back here, we can take a long, but that we can miss this as well. So I would probably take a long from the first presented fair value gap in the macro over here. Now, if I was looking at the prices live, I would see that we took support on this black candle and then this black candle, this black candle, this black candle, and it's next to my macro time. I might have entered on this or a block towards the this recent high somewhere in the back of the chart. So this would have been my trade probably, but I did not trade, so I cannot say anything. but these are the two possible entries that I see in hindsight. Thursday was an interesting day. We open high, make a high inside of an important volume imbalance, and then dump. So Thursday open high, we make a London high in daily volume imbalance, take that out in pre-market, and then reverse. Aggressively fall to previous day low. Now this was a funny day because I traded on this day and I did not have a loss. I was just almost break even, and that actually put me in a FOMO. So I did not trade the rest of the week because I anticipated this move. This was what, a 300-point move, and I entered on the top around here. Because of aggressive stop loss moving, I got stopped out here on break even. I was not actually break even. I might have put the execution here because the stop loss were not actually break even. It was just a few points below break even, and that stopped me out. If my stop loss was break even, I would not have stopped out. I don't know why I put it there. Why I put it like 2 points below that. Anyways, what's done is done. The most important thing is that I saw this move coming because I was expecting it to take out the Asia low. I did not expect it to take out the previous day low. Honestly, I just expected it to take the Asia low. So this was also 200 points. 190 points. Yes. Okay. So I entered on the CISD over here. I was trading pre-market, and when we had retracement back like this, I was like, if we close below this, I can go break even. But when I did break even, I moved my stop a little bit lower than that, and then I got stopped out. And I was heavily bearish with all the sell side. We had a lot of sell side on this side over here. And then when I got stopped out here and I saw this move that took out the Asia low, and I just closed the charts. I was like, no. Because if I was there, I would have taken bad trades. Anyways, macro time comes, and macro time we consolidate for a little bit, then make the first presented Fair Value gap over here. And then in that macro, we see that it is rejecting it. We go down, make another Fair Value gap over here. Now, if I was not in FOMO, I might have taken this one. Entered on this first presented Fair Value gap, targeting the previous day low. This was another opportunity for re-entry. Now Friday, we open high. I think we do not take this out yet. It's a relative equal highs. Into that important Fair Value gap again, we take out the previous day low, and then we reverse into the range. Friday opens and consolidates, make Asia high and take it, make London low and take it, takes out the previous day low, which would make me bullish because we have taken out the previous day low. Okay, I should say previous day low. And then we make relatively equal lows right before 9:30. Now, all of this sets a stage for a higher prices, and that is what I'm expecting. Market opens, makes the first presented Fair Value gap, Judas swing, we go down, take out these relative equal lows. I could have entered on this one, but no, I was bullish, so I would trade on the upside. Okay, this is hindsight. I did not trade on Friday, by the way. We take out the previous two lows over here. If I was trading, I would have entered on this rejection block because it's next to my macro time. And if I miss this entry, I would see the price come back into this first presented Fair Value gap, consequent encroachment that aligns with Friday opening range gap high. And I could have entered there, taking out these relative equal highs over here. So that's it. As always, thank you for watching. I will add the link to this PDF in the description, and I hope you find this insightful, as ICT says, and good day, good trading.